Today I want to take a look at the company Starbucks. Starbucks is trading at $49.50 a share, close to their all-time high of $52.09 a share. So a lot of people are asking, well, where's the stock going to go? Will it continue to increase or will it reset back to prior levels? And it's going to depend on where the financials are going to go over the next year. Interestingly enough, the company was reported 2014 revenue of $16.4 billion, which was a 10.6% growth over 2013. That was a slight reduction from their 2013 12% growth over 2012. If you take a look at the projection of their cash flows, the estimated projection of their cash flows, assuming they're going to continue at a constant 10% growth, and if you are a believer in discounting the company's cash flows as a determinant of the value of where the stock is going to go, that puts the company at about a 16 times EBITDA multiple. Compare that to the current EBITDA multiple of 19 times, estimates the company's stock price at around $37, slightly lower than where they are today. But if you're more of a believer in the company's market multiples as a determinant of value, that could put the stock price as high as $65. So the company's at this kind of threshold where you see in a lot of situations where looking at these technical valuation analyses, if you believe in them, might put the company's stock a little bit higher, or might put the company's stock a little bit lower. Again, this is assuming continued revenue growth at 10%. Now, a lot of people are talking about the company's future growth might increase further or increase as high as 15% or 17%. If you do that, that puts the value of the company's cash flows a little bit higher, closer to the $45 to $49 range where it is now. And if you believe in market multiples, that'll put it even higher, closer to again, closer back to the $65 or even $70 range. If the company, however's revenue and earnings are going to reduce lower than 10%, then looking at the company's cash flows, the stock price can go as low as $25. So again, this is one of those situations, kind of those wait and see situations where you want to kind of stay on top of the financials and obviously look at the reaction of the market, because the technicals are not the only thing that you would look at. It's obviously the reaction of the market and any other headline risk that might go with that. But again, when looking at the cash flows and financials, oftentimes there are clear situations when, whether looking at market multiples or valuing the discounted cash flows, every situation points to the stock price should be higher than where it is today, and those are buy opportunities that you want to look for. So again, this is one of those situations where I'd recommend to kind of wait and see what they're going to come out with next. And if you have any questions, please let me know. Thank you for watching Trading on Technicals.